Here's what $618 billion is hiding, and it has nothing to do with what China actually holds. The number you've seen on every headline is real. $618 billion. That's the official figure for Chinese holdings of U.S. Treasury bonds. Every major outlet has run it. Every analyst has quoted it. And almost every single one of them has missed the point entirely. Because that number doesn't tell you where the bonds actually are. If you follow financial news at all, hit subscribe right now, because we track this daily. And what's unfolding in the bond market right now is moving faster than most people realize. Stay with me through the full video, because the section coming up in the second half is the part Wall Street doesn't want ordinary Americans to understand. Here's what the Treasury data actually shows when you go past the headline figure. For years, a tiny country called Belgium, a nation with a GDP of roughly $600 billion, was listed as holding $481 billion in U.S. Treasuries. Belgium, a country smaller than the state of Maryland, holding nearly $500 billion in American debt. No mainstream outlet stopped to ask how that was possible. But the answer, when you find it, changes everything you think you know about this story. Belgium isn't holding those bonds. It never was. Brussels is home to Euroclear, one of the world's largest financial clearinghouses. When foreign governments, including China, want to hold U.S. bonds without those holdings showing up directly under their name in American data systems, they route them through custodial accounts at institutions like Euroclear. The bonds sit in Belgium on paper. The owner is someone else entirely. This is not a secret conspiracy. It is a documented legal feature of how sovereign debt custody works globally. But it means the $618 billion figure dramatically understates what China actually controls. The real number, according to researchers at the Council on Foreign Relations, including Brad Setzer, one of the most respected sovereign debt analysts working today, is likely north of $1 trillion when you account for custodial routing through Belgium, Luxembourg, and other European financial hubs. Think of it this way. It's like a safety deposit box. You still own everything inside it. You've just moved it to a different bank, one whose address doesn't appear on your name tag. Now here's why this matters right now, and why the bond market is signaling something that should have every American homeowner paying attention. During Liberation Day week in April 2026, when the latest round of tariff escalation hit, the 10-year Treasury yield spiked 50 basis points in a single week. 50 basis points. That doesn't sound dramatic until you understand what it means at scale. Analysts at Deutsche Bank and others flagged something unusual. The largest overnight moves in U.S. bonds were happening when U.S. markets were closed and Asian markets were open. That timing is not random. It suggests a seller, or sellers, operating from the other side of the world. China hasn't dumped its Treasury holdings. What it appears to have done is something far more strategic. It has hidden them, moved them, and is now quietly withdrawing in a way designed to be untraceable through standard tracking. And this is where abstract geopolitics stops being abstract and starts being your monthly mortgage payment. Share this video right now with anyone in your life who thinks the US-China trade war is only about factories and tariffs. Because what's happening in the Treasury market feeds directly into the mortgage-backed securities market, and that connects directly to the rate on your home loan. When large sovereign holders reduce their appetite for U.S. Treasuries, bond prices fall. When bond prices fall, yields rise. When yields rise on 10-year Treasuries, mortgage rates follow, because mortgage-backed securities are priced off that same benchmark. The 30-year fixed mortgage rate is already sitting above 6.3%. The 10-year yield has touched 4.4%. Every 25 basis point move up in that yield adds hundreds of dollars per year to the carrying cost of the average American home. This is not a hypothetical. This is arithmetic. Former Treasury Secretary Hank Paulson and economist Steve Hanke of Johns Hopkins have both described what financial strategists call the mutual assured destruction dynamic. The idea that China cannot aggressively dump treasuries without crashing the value of its own remaining holdings. It's the same logic that kept nuclear superpowers from firing first. Both sides lose if the trigger is pulled. But here's the part that gets left out of that comforting argument. Gradual, custodially routed withdrawal doesn't require pulling the trigger. It's a slow bleed, and a slow bleed can still drain the patient. The scenario risk managers at major banks are quietly calling the uncertainty weapon is not a sudden treasury dump. It is exactly what appears to be happening right now. A sustained, semi-opaque reduction in demand that keeps yields elevated, keeps mortgage markets tight, and keeps American consumers under financial pressure without ever giving policymakers a clear single moment to point to as the cause. Here's the honest bottom line, and it's more nuanced than either the alarmists or the dismissers want to admit. China has not weaponized its Treasury position in any dramatic, sudden way. The mutual destruction logic is real, and it does constrain behavior. But the custodial routing evidence, the overnight bond market timing, and the steady upward pressure on yields all point to something more subtle and ultimately more durable than a one-day market shock. A slow withdrawal conducted through European clearinghouses is harder to detect, harder to counter, and harder to explain to the public, which makes it, arguably, the smarter play. The question no one in the financial media is asking loudly enough: has the threshold already been crossed? Not crossed into crisis, but crossed into a new baseline where Chinese demand for American debt is structurally lower than it was 5 years ago, and where that lower demand is already embedded in the mortgage rates, the housing market freeze, and the borrowing costs that are quietly reshaping American financial life right now. Drop a comment below. Did you know about the Euroclear custodial routing before this video? And do you think China moves from quiet withdrawal to something more deliberate in 2026? Every single day, we break down the stories that are reshaping your financial life before the mainstream catches up. If this video gave you something the headlines didn't, subscribe. Not for us, because the next piece of this story is already developing, and you'll want to be here when it does.